Believers in the US recovery had their best win in almost 2 years last week, with stocks rising for 5 straight days. The result of this is the fact that the Greek credit crisis is largely dissipated due to the fact that the IMF has improved a bailout package for them once again. Despite the upward trend in stock markets, commodity markets had quite a rough week last week. On Thursday alone, futures for corn on the Chicago Mercantile Exchange dropped around 12%. Also last week, due to the fact that it was a risk-on week, the New Zealand dollar traded in a very high range, and over the weekend it traded in a 50-point range in the mid 82.50 to 83 cent range against the US dollar. It will be a big week on the data front for New Zealand this week, with quarterly business opinion out on Tuesday and also the gross domestic product out on Thursday of this week. Our forecasters are currently expecting that GDP will be around 0.5%, and if hit, this will be a very impressive result for New Zealand due to the fact that the Canterbury earthquake had such a significant impact on that area back in February of this year. Up until now, we have been expecting that GDP would produce a negative number for the first quarter of this year. However, as a result of the better than expected recent economic data, our number crunchers have upwardly reversed their forecast. Due to the fact that the Greek credit crisis has dissipated over the last week and also more good New Zealand data has come out, our interest rate markets has increased somewhat over the last week. 5-year interest rates have increased about 12 basis points over the last week alone, and with good economic numbers expected out this week, it is likely that this trend may continue.